The local index is trading in the green at midday trade, while the currency is weaker on the back of Eskom extending scheduled electricity cuts, causing investor concern. Petri Redelinghuys is the trader and founder of Herenya Capital Advisors. He joins us now for the latest market moves. A happy Monday to you, Petri. The rand under pressure, not so happy. What's going on there?
Good afternoon, and thank you for having me. I think a couple of things happening with the rand. I mean, we mentioned in our note over the weekend that we probably expect from here that the emerging market currencies in particular will start to perform relatively well over the next 12 months. We see the dollar index coming down somewhat as dollar strength is abating a little bit. So that bodes well for countries like us in the emerging markets. And also what we're starting to see is that, the Chinese bull is waking up again. The Chinese economy is coming back to normal now. Yes, they are closed for Lunar New Year over the next 2 weeks or so. So we're not going to be seeing a lot of action coming from China, or at least from Chinese markets. But what we are keenly watching is how much people are traveling within China. Something I saw that so far, since the Lunar New Year has begun, travel compared to last year is up something like 580%. So this to us means demand for energy. And also is seeing a bit of a policy change from the Chinese, where they're rolling back some of their extreme hard lockdown policies and stuff in China, which means that we see a return to production. So all of these things should stimulate demand for commodities, for energy. This bodes well for us and should lead to a stronger rand over the medium term, if you will. However, today's move, I think, can be explained with some of the news that we saw over the weekend, right? I mean, we heard now that we're going to have at least stage 2 load shedding permanently for the next 2 years, which means that there is not going to be one day without power cuts in South Africa for the next 2 years at least, right? And this conversation you had just before this was quite interesting and quite telling. I think there's a lot of frustration, built into all aspects of Eskom, the people within Eskom, the customers of Eskom, aka us. Everybody is extremely frustrated with the situation that's busy unfolding, and it's going to not be good for our industry, right? Also, if we look at, the current circumstance around what the US had come out and said, America, the White House actually, and we fact check these things to make sure that it's true. There were some reports over the weekend that US government has put out a warning to its citizens and companies that are operating in South Africa to say, look, have contingency plans, have disaster recovery plans in place, because we do think that there is at least a 50% chance that we see total power grid collapse in South Africa. This is bad news, and I think is putting the rand under a little bit of pressure. However, the rest of the market's doing relatively well. Our market is up sort of 1.25% so far. A lot of this performance is centered around resources and financials. Obviously, we have some interest rate decisions coming out later this week and that kind of thing to look forward to as well. But overall, despite all the problems that we have, our market is still well positioned, I think, to take advantage of relative outperformance compared to other developed markets over the next 12 or so months. It's just we have to find a way to deal with the power situation. And, there's pros and cons or positives and negatives here that we are seeing. So, yes, government is also now kind of saying, look, private power generation, we're taking off the limits. Anyone can generate as much power as they possibly can. So this opens the door for private power generation to really enter into the marketplace on a big scale. It might obviously take a number of years to get these new power plants up and running, but the regulatory environment is becoming really, really conducive to privatization of the sector, which is fantastic news. The sad news is that we are in for at least another 2 years of load shedding on an almost guaranteed basis, which I think is a little bit of negative sentiment around our currency, but the rest of the market's doing really well.
And we're only on day 23 of 730
and day 23, right? And we've already had 68% of the load shedding that we had in 2019. It's a weird comparison, 2019 to now. But, we've had almost 70% as much load shedding as we had in the whole year of 2019, and we're not even a month into this year. So It's going to be rough. It's going to be an interesting year, I think.
Buckle up. Let's take a look at the focus of the week. The South African Reserve Bank expected to announce whether they'll hold or raise the repo rate. Is the question that whether, they'll hike or they'll keep it where it is? Or are we looking at inflation as the governor always warns?
No, look, I think that, our market, our Reserve Bank generally follows suit to what the larger economies are doing, particularly the U.S. So I think that expecting a hold on interest rates is probably a little unrealistic. I think we'll probably see around 25 basis points or 0.25% increase. I think what we've seen is, and again, these are some notes that we put out in our Sunday newsletter, is that we probably have seen peak inflation now, that we see inflation slowing down or some deflationary pressures. In fact, emerging markets are leading that deflation or disinflation or a normalization of pricing. So it just means that prices are still going up, just not as fast as what they were before. And we might see some price stability coming to the market relatively soon. And this, I think, is a product of the interest rates that have gone up as much as they have. Now, whether or not this means interest rates start coming down immediately, I very much doubt. I think that what we just see is a slowing down of the pace of interest rate hikes, and potentially in 3 months only do we start seeing, okay, we'll stay unchanged for some time. In the meantime, I think for the next 3 or so months, we still see increases in interest rates, just smaller increases than we saw in sort of the latter part of last year.
So Herenya, a natural gas and helium producer, is now producing liquid helium at its Virginia gas project in the Free State. Talk to us about those developments.
Yeah, so that's quite an exciting development, and Herenya is one of those stocks that, I haven't been too interested in so far. It was kind of, very, very hyped at one point at the share price. Everybody got really excited about it. It traded up from, sort of the 10 Rand region, rallied all the way to 44 Rand in the space of 2 years. People were very, very excited, but this was all on the promise of development and the promise of production and all of this and that. And today, they put out a statement, an update to say, look, we are actually producing liquid helium for the first time, and it makes South Africa one of 8 countries in the whole world that is actually capable of doing this. We haven't really got too much, details around how much they're producing and that type of stuff, but what they have reached is a significant milestone, which is that their plant is functional, operational, and they are actually producing product or liquid helium, which is fantastic. There's a huge amount of interest, I think, in the market in helium production. This helium is a very versatile thing. It's used in, primarily in the production of semiconductors, as it's a very sort of non-heat conductive medium through which welding and all sorts of stuff can be done. So it is very much used in the production of semiconductors, which, as we know, is a very big part of today's economy. So there is absolutely a market for their product. And for the first time, we're going to start seeing some earnings coming through for Herenya. So exciting time, I think, for Herenya shareholders. And, so much so that even we bought a little bit this morning.
Yeah, so much has been said about investment in South Africa as a result of the power cuts in the next, 730 days. But Mercedes-Benz South Africa is anticipating a surge in electric vehicle sales in 2023. How?
It's a good question. I think maybe they go from 0 to 1, right? I mean, that's an infinite increase. I think that, there is obviously a section of the market where people are completely power independent and can probably charge their own electric cars from their solar setups that they have already installed at home. I think that one of the fastest growing segments in our market we're going to see this year and probably for the next 10 years is going to be solar installers going into homes and putting up solar and battery solutions for people. And if you have the capital or the ability or, enough money, I guess, to be able to buy an electric car and you are already power independent, I suppose it makes sense. Generally, though, for people like you and me, the everyday man on the street, I don't see how an electric car is going to work for me if I can't really charge it for longer than 50% of the day. But who knows? I think that electric cars and EVs or electric vehicles is definitely going to start penetrating the market in a very big way. We see regulation in Europe starting to force that within the next sort of decade, and that is starting to filter into South Africa. But I do think that it's going to be a very small segment of the market of the really, really high LSM income class that will be interested in these electric vehicles. The everyday man on the street is going to be looking for smaller engines and easier ways to get by rather than buying, really expensive million-rand cars.
Petri Redelinghuys, thank you.